AST SpaceMobile is building out a network of satellites for mobile broadband. The total addressable market is estimated to be over $1 trillion, so if successful, AST stock could have huge upside ahead. It's a tantalizing prospect. Unlike other satellite services, AST can connect directly to existing smartphones. The company has already connected 5G international calls via its BlueWalker free satellite and signed partnerships with the likes of AT&T and Vodafone, and the company said its initial launch of 5 satellites is fully funded. And yet AST is one of the most shorted stocks in the market, with a short float of 23%. And there are some obvious reasons for caution. The first is valuation. AST closed Q3 with about 90 million shares outstanding, but the publicly traded company AST SpaceMobile only owns about 41% of the operating business AST LLC. The remainder belongs to investors who control units in AST LLC. Those investors will over time gradually convert their units into the common stock. So while some data sources report AST as having a market cap around 500 million, in fact, the equity value of the entire business is well past 1 billion. Another issue is execution. High altitude and space-based cellular services have been tried repeatedly. Google's Project Loon was shut down. The same was true for Facebook's Aquila. SoftBank has spent years developing a similar model without success. In September of last year, a bearish report argued that AST's technical capabilities simply aren't good enough. AST may have connected a few low-speed calls via its satellite, but that's a long way from providing global, always-on connectivity. The latest 5G demonstration was at a speed of only 15 megabits per second. Even if the tech works and AST can fend off competition from the likes of SpaceX, the company has a funding problem. It closed the third quarter with 136 million in cash, but it's going to burn nearly all of that cash over the next 5 quarters. And that doesn't even account for the fact that AST needs to send up many more satellites. Its business plan originally called for 168 satellites. That figure is now down to 90. Back in 2021, AST said its satellites would cost $11 million each, but the first 5 satellites have cost $23 million, more than twice as high. Even at the lower cost, AST needs to raise $1 billion simply to finish building out its constellation. It then needs a few $100 million more to fund operating losses, and this will all require significant dilution of existing shareholders. Lack of funds and an unproven business model mean that this is a highly speculative stock, which is why I give it a negative rating. But these are my personal opinions, not financial advice, and I've got no position in the company. For more investing videos, visit my website, 3minutebreakdowns.com. Thank you for watching.